The major averages snapping 3 straight days of losses today. You can see the Dow up 14 points, but on the week, it wasn't enough, all three, ending down about 1% on the week. Joining me now is Steve Dudash, the president of IHT Wealth Management. Good to see you, Steve.
Good to see you. How you doing? I'm
encouraged that after a 205-point sell-off, we did not have another sell-off today. Are you?
True. Here's the moral of the story. We're not going to war with North Korea. Okay? I mean, the only thing that the Korean government really cares about is staying in power. If they attack us, it's a surefire way that they'll get taken out of power. We're not going to attack them. We attack them, Seoul's gone. The 11th biggest economy in the world's gone. Millions of people die. So this is just two leaders acting like big babies, pointing at each other and calling each other names. But that's an opportunity. And from the market standpoint, for your viewer standpoint, the markets have been down the last few days because it's been the uncertainty. The VIX is through the roof. Markets go down because of that uncertainty. They got to price in the chance of a war. So we take advantage of that. Markets go down. Your viewers who have had cash sitting on the sidelines, now you buy in. Looking for opportunities to sell out of some of those gains and get back into the market, now's when you take advantage of it. When things look like they might be dire, but they're not going to be. Take advantage of it and buy into those dips over and over again. And there's going to be
a rare dip. A lot of people were waiting for this dip. Some people thought it would be a little bit better in the sense that stocks would get a little bit cheaper. Okay, the North Korea worries on Wall Street taking a back seat today, but the Fed took center stage, right? We got that CPI report, consumer inflation, essentially a no-show. There's what, a 4 in 10 chance at this point that the Fed hikes by December?
I bet you it's more than that. I mean, at the end of the day, they've been telegraphing over and over again. There's another hike coming at the end of the year. There's a couple hikes coming next year. That's a good thing, though. It just shows that our economy is continuing to rebound. Unemployment's as low as it's been in forever. You know, interest rates haven't had to spike at that much yet. Even wages are starting to come up a little bit, which helps our economy a lot. People are buying back in because they feel a little bit better. Consumer sentiment's been up. So these are all good signs, and they all point to the Fed wanting to raise rates a little bit more, which ends up helping the consumer at the bottom line.
And the president took credit for all of this when he was addressing reporters at the top of the show, basically saying, mentioned the stock market right away. Look, since Election Day, the Dow is up 19%. The Nasdaq's up 20%. It's kind of unbelievable. How much cash is sitting on the sidelines now, ready to go to work? How much cash are we looking at?
There's been a lot of cash sitting on the sidelines for a long time. I mean, you've got interest rates and bonds still historically low, so people aren't really buying into that for growth. So the international markets have been a little choppy. Now, this year has been good, and we've been promoting it a lot since January, but the U.S. market is still the most stable thing out there to buy into. So whenever you see these dips, whenever you see these opportunities, people are buying into the U.S. market, and that's maybe a little more so than just the president's belief. Has been propping up the markets a little bit more on that end, too. Plus, a lot of people believe that the Republican agenda will eventually get lower taxes, will get better regulatory environment for businesses, and that probably has a little more to do with it than just someone who's in charge of the presidency.